Hello and welcome to A Live with Amanda. Today we're going to be talking about how to create a budget for your private practice. So, if you watched my video earlier this week, you'll know I talked about how to reduce expenses, and I probably should have done this video first, but that's okay. The inspiration came to me in doing that video. And so here we are. And if you're farther along your journey, you probably already have a budget, because if you are successful in your practice, more than likely you have a budget. Okay. I'm a fan of budgeting. I'm a financial kind of like, it's one of my interests, reading personal finance. I've been watching CNBC for years. I do the finances for the business. I do the finances for our household. It's something that I enjoy doing. And so, I'm a glutton for punishment that way. I know therapists generally are not money and numbers people. So they're like, eh. So if you don't want to do this budget, that is fine. You can hire a fractional CFO. Your accountant can do it. If your partner is, financially savvy and is willing to take on that burden, you can certainly pass this off. But I think no matter what stage you're at, if you're at the solo practice stage, part-time, full-time, group practice stage, you need a budget, or you need a general idea of what your expenses are, what your revenue is, what your expenses are, what your salary is going to be, or what your pay is going to be, and where to put money when you have extra money. I will say, I'll just share like a little story. I remember many years ago when I was still a solo practitioner, and I was talking to a colleague of mine and talking to him about my journey. And it was like one of the first years I did really well in private practice. It was like I was like making six figures, which was like the goal, right? Like back then it was like, that was what every coach sold. It was like, you can be a six-figure private practice owner. And I was like, wow, I had never made six figures. I had barely made like five figures, right? Like at an agency. And so that was the dream. And I remember when I hit that, and I had paid myself a salary. I had paid myself, I had LLC with an S Corp, so I had a salary, and I was taking some distributions, and I had paid my salary. I had paid myself the distributions I had been planning to pay myself throughout the year. All my expenses were paid. I had money set aside for taxes, and there was like money there. And I was like, that had never happened before, right? Like I had been like one of these people who like really loved getting a tax return, right? Because I was like, oh, if I like overspend in the year, I just like pay off my credit card for my tax return, right? So, like super lived like that in my 20s and early 30s. And so when I went into private practice, and I eventually had like a little bit of what is a cushion. And I guess like at the time I like had some kind of emergency fund, or, whatever. It was like, wow, like I have extra money that I can just do something exciting with. I don't remember what I did exactly. Like my memory, certainly after 2 children, COVID, and like now this group practice, I don't remember anything. But I think I want to say I did like something exciting with it. If I take a moment to think, the first thing I did was, not the first thing, but one of the things that I did was I did buy myself, if anybody here watching knows what a Stella McCartney bag is, I did buy myself a Stella McCartney bag. It's a vegan luxury bag. Back then I was vegan, now I'm vegetarian, but I still don't wear leather goods. And so that was like one of the first things that I did like with my private practice money, because it was like, wow, I have the money to like buy a luxury bag. Like was a big deal. Okay. When all my bills were paid, both personally and in the private practice. And so having a budget allowed me to do that, right? Because I knew how much my rent was. I knew how much my electronic health record was. I knew how much my phone system was. I knew how much I had a biller intake person at the time. I generally paid her the amount of that she worked, but I had a good idea of how much that was. I absolutely, from the very beginning, tracked all of my expenses, and I did it in the rears. I didn't forward project this, but I tracked all of my expenses, and I tracked all of my revenue. Your revenue is easy in a platform like TherapyNotes to track, because you just pull a revenue report right there. Your expenses, if you use a platform like QuickBooks, which I highly recommend you use QuickBooks. I was using Excel sheets for a few years and then quickly jumped to QuickBooks. It is not that expensive, especially as a solo practitioner. It's not even that expensive as a group practice to use QuickBooks. I love QuickBooks. You should absolutely be using QuickBooks. It will make your accounting easier, to make your having reporting easier because it'll give you a profit and loss. You can see all of your expenses. You can break it down by month. You can break it down by year. You can compare years. And so having that data is going to be really good. So this should actually be a video on and QuickBooks should be the sponsor for this video and not TherapyNotes, right? Because having QuickBooks is going to really help you understand your expenses over long ranges of time. And so I'm going to tag QuickBooks in this so they can send me a check. And so I think having a budget laid out, even if it's in the rear to know what your expenses were and then to know what your expenses are going to be in the future is going to be really important. We do financial planning on a yearly basis. We will do it for the following year. We'll take a look at what our budget is. That's how we know when we can hire admin staff, we can increase our marketing fees. We do it now based off of percentages, not actuals. And so we account 65%, to go to payroll, 70% to go to payroll. If we add the admin staff, 10% goes to rent. I'm like, what's the other 10%? So it leaves about 10% or so in profit. And then you got another 10% that 3% goes into like a general account. That's where we'll pay for things like softwares and Amazon and et cetera, et cetera. I can't remember where the other 7% necessarily goes. Some of it goes to taxes. Some of it goes to a variety of things on our profit and loss sheet. And so we do it based on percentages. So you could do it based off percentages. When you're really small and you're a solo practitioner, it's better to do it on actuals because your rent is your rent. You're not expanding. Your rent is $600 a month or $1,000 a month. If you have an admin person, it might be variable, but you can round up. I'm always a fan of rounding up. If it's 1 month, your admin person's 200 and the next month it's 300, I'll just say it's always 300. And then if there's any left over, that goes into the profit and you can use it for other things. And so you can look at what are your fixed expenses? What are your variable expenses? Sometimes when I do some financial planning with my consulting clients, it can be a little hard because they don't know how much the credit card, processing fee is going to cost because it depends on what their revenue is, but we can guesstimate at some level what that's going to be. And it'll give you a pretty good idea. Another plug that I have, if you're thinking about this and you're like, yes, I absolutely want to create a budget, is looking at the Profit First method. There's a book, Profit First for Therapists. It is great. Whether you read the original Profit First or Profit First by Therapists, the concepts are the same. I've absolutely read both of those books and followed. I don't really follow a Profit First model now. Our business is, for me, too complex to follow that, especially with a variety of different admin and et cetera, and what's payroll and accounting for all of that. But I did, when I was a solo practitioner, the idea is that you pay yourself 50% of what comes into your business, 30% goes to, actually I should start, 5% is your profit, like right there, you pay your profit first. And then 50% you pay yourself as like a salary. 30% goes to operating costs and 15% goes into taxes. And so there's some adjustments depending if you're a virtual only practice, you don't need 30% for expenses. If you are you're in a high taxed area or you file with your partner, they have a lot of income, your taxes might need to be higher. But that's a very, 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 very good starting off point. Again, I said it's based off percentages. You can do that sort of like in actuals as well if it's 30% of your expenses. And then what you can do is that if 1 month it's only 27% in your expenses, you can either roll that over to the next month and pay for a training, or you can bump that to your profit and give yourself more profit. So again, another person I'm going to tag is Mike Michalowicz, who wrote Profit First, and see that I am promoting his book because it is a good place to start for budgeting for private practices. So I'm going to give you our tips on what we're doing for our group practice for budgeting. But first, I want to thank our sponsor, our actual sponsor, TherapyNotes. I'm like, I wonder if they use QuickBooks. I bet they do use QuickBooks, right? Because it goes in tandem together. You can track all of your revenue from TherapyNotes. You can track all of your insurance payments. You can track your credit card payments. You can look at how many appointments you had. You can look at write-off. I've been working on looking at write-off reports. It's been very helpful, especially when people are like, why are you writing things off? And we can see that it's just basically bad debt. And so TherapyNotes has wonderful reporting functions. So if you are looking to really enhance your business and not just using it as an electronic health record to write your notes, you would then also use it to look at reports. I highly recommend that you look at TherapyNotes because it's really geared towards the business owner in private practice. So a big shout out to TherapyNotes. So going back to budgeting, the biggest expense you will always have, whether you're in a solo practice or a group practice, is going to be the clinicians themselves. Whether you're that clinician or you're hiring other people, the most amount of money goes there. In this business, the margins are not that high. In restaurants, margins can be as high as 30%, really successful restaurants. Margins for group practices and solo practices, like pure profit, are never that high because you are going to be paying between 50 to 70% to your team, right? Whether you have contractors, you have employees, you have admin staff, you account for some taxes in there, you account for, all of the benefits that go into there. And so really the margin, like we account for 65% going all in to, sort of like employment and everything. And so that leaves 35%, but there's like rent is 10%. Like in South Florida, maybe you live in a lower cost of living area, your rent is not so high, but you have to know that there are going to be expenses for your practice, and having those outlined is going to be really important. And then you can compare that in a platform like QuickBooks to see how much you've actually spent. Then you can look at your profit. Maybe it's more than 5%. You can go buy yourself a luxury bag or something else that really feeds your soul. It doesn't have to be a luxury bag. It could be a training. It could be paying down debt. Could be something really meaningful to you. But that is how a very quick overview on how to budget and tools that you can use to make your practice successful in 2026. I'll see you soon, everybody. Bye.